Is it? What is amortization? You will have the book value. Is it? Book value will be there. Carrying value will be there. Carrying value is what? The value as on brought forward. Okay. Now, when you do this exercise, what will happen? You will have the fair value. You want to sell it off. Is it? When you want to sell it off, definitely the value will be more or the value will be less. The issue comes when the value, if the value is more, is it right? If the value is high, or I can say difference, is it right? If the difference is positive, then we call it as a revaluation reserves. Okay. If the difference is negative, then we will say that definitely the fair value, either you take it as a fair value or you take it as a market value or you take it as a sale value. Is it right? Various different questions will give you the, but the objective is same. If there is a difference, means the value of the asset is less, then we call it as a impairment. Is it? We call it as a impairment. Again, what will happen? There will be some 8 to 10 marks. Is it right? 6 to 8 marks. I'm not, maximum 3 questions or 6 to 8 marks is focused on this. Okay. We will cover this as a impairment. It's very simple. It's not difficult at all. Is right? As we are done with respect to research and development, the same concept apply. You will know how to calculate the impairment loss. Okay. Identify the circumstances, why the value of the assets will decrease. Is it right? Why the value of the assets will decrease. So you are talking about technology, value of the assets will decrease. Is it right? You are talking about the different expectations of the customers, value of the assets will decrease. You are talking some in terms of regulations. Is it right? The value of the asset will decrease. Is it the various different factors? We are not going into detail about how it will get affected, but we will take into consideration the basic concept of impairment. Account for reversal of impairment loss. Is that when we definitely, is it right? So in some cases, the value of the asset in some years, okay, the value of the asset will decrease. In some years, maybe there is a possibility that the value of the asset will increase because of demand and supply factors, all those things. There are very different situations. Is that? Describe what is meant by cash generated unit, CGU. Any idea about this? Yes or no?
No.
Cash, yeah, good. Cash generated unit, it says you are having different businesses. Is it? Assume very simple. You are doing. See, nowadays people are doing lot of things. Is that? They will do the chocolates. They will have the bouquets. Is it right? Flowers. They will have the cards. Is it right? They have the gifts. Everything. Is it right? What happens? You will have various divisions. Is it right? You are talking in terms of you have different divisions are there. Is it right? Different divisions are there. If we are doing different divisions, what will happen? One division will generate cash. Is that? We use the word cash cows. Is it right? We use the word cash cows. They will ask you this. Is that? There is a concept called as a BCG matrix, Boston Consultancy Group matrix. Is it right? It is not there in the syllabus, but as a ACCA student, we have to know about this. Is it right? What happens? There are things. There is a cash cow. There are the stars. Is it right? We have something called as dogs, and we have the question mark. We are dividing the business under 4 matrices. four different segments. This is called as a Boston Consultancy Group matrix. You have a cash cow. Some businesses, you are hot cakes. We'll say that yes, this product is a hot cake. Is it that? What does it mean? Means this product is a fast moving goods. Is that one product will give you cash generated? Is it right? You very simple, very simple. You are talking about the coffee shops. Is it right? I will give you example. In coffee shops, what will happen? The most people, how they will get the profit? They get the profits from the water bottle. You can you imagine? Because they will sell us water bottle for 100 paisa. They will get the same water bottle for how much? They will buy in bulk. They will get the water bottle for 20 paisa or 25 paisa. Take my word, it is a fact. 25 paisa they will get a water bottle, but they will sell the water bottle at 100 paisa. Every other person will buy water bottle. One or two more. Is it right? That is what we are talking about, the cash cows. Very interesting. What is meant by cash generated units? Is that since the basis for which impairment losses should be allocated. How if the value of the asset is decreasing, is it right? You are having different asset. Asset 1, is it right? Asset 1, asset 2, asset 3, asset 4. Is that any one of the asset value is decreasing? Is that any one of the asset value is decreasing? Now what you have to allocate with respect to other assets. Okay, if this asset value becomes 0, is it right? If this asset value is assume from 125 it becomes to 0, then you have to allocate this 125 accordingly to the other assets also. We will do that. Is it right? We will do how. There is a lot of practice questions are there today and tomorrow morning. Okay. Since we have to allocate the impairment loss to the assets with respect to what? With respect to cash generating units. Is how we have to allocate the impairment loss with respect to other areas. Is that? And answers question relating to these areas. Is that? This is what we will cover. Now, what is the, now again I will say before going to the next one, is that concept has to be clear, calculations will be easy. Impairment is nothing but the value of the asset will be lower than the carrying value. Got my point? Lower than the carrying value. Now when the lower than the carrying value, we should make it a point that how there is a loss. If there is a loss, how we have to allocate loss to other departments, other units, sorry. Is that how we have to allocate to the other units. We should not say that loss is only for one. We have to distribute the loss. Is it right? If you are doing the business, you are getting loss in one of the products, what you will do? You will distribute that loss to each and every one proportionately. That much we are doing in this lecture. Fine. Now, when we do the things, is that what are the indicators of the impairment? Now it's very specific for us. Is it right? What are the indicators? The value of the product, market value will decline. Is it right? What are the indicators? Change in technology. Got my right? You have changes in technology. You have some regulations by the government imposing regulations. You are talking about the economic environment. Is it right? Economic environment, how the things will work. Introduction of plastics, it will have impact. Is it right? That's what you should not use plastics. You should not use now you are talking about the electric cars. Is it right? When you are saying about the electric cars, the moment electric cars will work, what will happen? The value of the petrol cars will automatically decreases. Is it right? This is what the impairment we are talking. We are talking about the obsolescence. Is that outdated technology? Is that it's old? Because you are talking it. Sometimes see some cars become old, value will increase. That's a different case. Classic cars. We are not talking about classic cars, but obsolescence is very outdated. Automatically the value of the asset will decrease. Now change in use. Yeah, you are moving from one platform to another platform. Is it right? When you are working on a one system, and automatically you are talking about the automation. Is that the moment you are talking about the automation, what will happen? See the thing, as simple as that. During the COVID, what happens? People have immediately shifted from one business model to another business model. Is it right? The moment they are shifted to another business model, automatically what will happen? As simple as that. I'll give you this example, you can understand much better. During that time, the demand for talabat, the demand for akid was really high. Is it right? Because what happens? We don't have the option that we have opted for that. Is that now once the things are becoming normal, definitely nobody wants, they want, but the frequency, the demand of that service has been declined. Is it? When the demand has, at that point of time, the market value of talabat, the market value of akid, the market value has been really extraordinarily high. Is it? Now the market value of those firms, those brands are comparatively less when you are comparing with that during that period. This process is called as, the decrease in the market value is called as impairment. Okay? Non-current assets should be carried at a lower of. Which is, we have to, when we are stoking these things into statement of financial position, SFP, you have to, when you are showing it in the balance sheet, you have to carry at the lower value. Is it right? Now, lower value, whether carrying amount or the recoverable amount. Is that greater of what? Fair value less cost to sell. Is it right? Greater than, we will always compare. Is that what is the carrying amount? Is it right? What is the carrying amount and what is the fair value? Or we can say value in use. Is it? We always make it a point. Yes, whether it is the value, the carrying amount is more or the fair value is more. See, if the carrying amount is 10,000 and the fair value is 8,000, we are not concerned. Definitely, we will take into consideration. We will not give importance when we are having the lesser value. Is that? But if the carrying amount, is it? If the carrying amount is 10,000 and the fair value is how much? No. If the carrying amount is 10,000 and the fair value is 18,000, what will happen? Definitely there will be profit. But if the carrying amount is 10,000 and the fair value is how much? 7,000. How much is there? There is a minus value of how much? 3,000. This minus value is called as a impairment. Is that very interesting? The moment you started doing calculations now, you will find very interesting. Is that? Now, how we are doing it? There is a IAS 36. Understand this. These are the standards. Is that you are in the beginning stage. If you are good here, strategic business reporting, SBR will be a piece of cake for you. Understand, but SBR will be a piece of cake for you. Is that what we are going to do? We are talking about what are the indications of impairment, how we are going to measure and recognition of the impairment, reversal. It is something new. Okay, we will do this. Reversal of impairment means definitely if there is a fluctuation in the market values, how we have to treat it. And most importantly, we are talking in terms of cash generated units. What is cash generated units? Again, I am repeating. Cash generated units are those units where it creates the cash inflows, and in case of any impairment loss, we have to allocate the impairment loss proportionately among the other units. That is the reason we are talking in terms of here CGU. Is it right? In the examination, they will put it as cash generation, cash generating units. Very important concept. Impairment of individual assets. Is that an asset is impaired if the recoverable amount is below, as simple as that. That's what we are talking about. Is that below the carrying amount? An asset recoverable amount is higher of its fair value, less cost of sales. Is it right? Definitely, we will say that the recoverable amount is how the difference it matters. What is the concept of value in use? Is it right? The present value of cash generated by the asset. We'll say fair value. It is a what is value in use? What is the value of your mobile? What is the value of your car? As simple as that. What is that value of the asset? Is that how much it generates? See, what is the concept of asset? Asset is nothing but it should generate cash. Is that it generates revenue? Now, if the asset is generating higher revenue, the value of the asset will be more. If the asset is generating lesser revenue, the value of the asset will be less. Understand? Again, I am repeating. See, ask him what is the market value. Definitely, you have the land. Is it right? You have the land in prime location. The value is high. You have the same area of land in some remote location. In the same area, in terms of in terms of measurement, is it right? In terms of measurement, you have 500 square yards. If it is in a prime area, the value in use is more. If it is in remote area, the value in use will be less. Understand what? That is what we are talking about value in. Indicate. What are the reasons of indication? We have done this. There is a obsolescence, there is a damage, value will decrease. Changes in the asset use. Is it? Sometimes we are just moving from one asset to an improvised asset. Is it right? We are talking about in terms of what? We are talking in terms of improvisation. We don't want to use the asset as simple as that. Automatically the value in use will be less. See, another one is coming to my mind. iPhones. Is it right? You have the smart technology, smartphones. Is it right? When the smartphones is there, the new phone will come, new model will come, the older model, automatically the value will be less. When you are launching a new product, is that the value will be more. After 1 year, automatically the value of that product will be comparatively less. Is it? That is otherwise called as a impairment. Is it? That is what asset performance below expectations. Is that? It is another signal of impairment. Why we are doing this? Keep it in mind. We are doing this only to make sure that when we are doing calculations, one or two questions will be on theory, the other questions will be on calculation. Section A basically on theoretical concept. Section B core will be on the practical concept. Is that decline in the market value? That's what I say in terms of smart technology, phones. Is that changes in the economic condition, technology or legal? Is that automatically the value will decrease? Increase in the rate of interest. I don't know you have done financial management or not. Is it right? Last chapter also we have come across one concept with respect to present value. Is that rate of interest is increasing? What will happen? The present value will decrease. Is it? Rate of interest is increasing. The present value. See, if the rate of interest is 4, is that why I will tell you this? Is it right? C divided by 1 plus R. Take calculator. Calculator has to be there with you. Okay, 100. Assume cash flow is how much? 100. Is that? Assume cash flow is 100. Keep calculator ready with you. Is that 1.04? How much we will get here? Fast.
96.15.
96.15. Calculator has to be there on your fingers. Okay, now assume the rate of interest is how much? Assume the rate of interest is 6%. Is it right? 100 divided by 1.06. How much?
94.3.
94.3. Okay, now you understand, if the rate of interest is increasing, present value will decrease. Fine. If the rate of interest decreases, is it right? This comes in financial management. If the rate of interest is decreasing, the present value will increase. So what happens? Assume the rate of interest, as simple as that. The bank in the loans, if the loan rate of interest on loan increases, people will buy lesser loan. Is it right? People will borrow lesser amount. That also one of the reasons. We are talking about what are the internal reasons and what are the external reasons. Is it? If impaired, that's what we have to make it, we have to differentiate it. Okay, we have to differentiate. If impaired an asset should be written down, you have to see recoverable amount, something you will recover. Is it right? It's not like that you are talking about, I'm going to sell it off, I'm taking my new laptop, I will sell the old laptop. Is it right? If I'm selling my old laptop, I will get some amount. Is it right? That is the recoverable amount. And the impairment loss should be taken to what? In terms of a profit and loss, because it is a loss. The only exception to this is where asset has previously revalued, in which case impairment will be first we will take as a surplus, then we will add it at what? We will add it as a other comprehensive income. Is it? If it has been valued previously, definitely if there is any positive value, we will add it as a revaluation surplus. Any excess should be taken to the statement of profit and loss account. Again, is that revaluations? If there is a revaluation surplus, you have to what? You have to add. Fine. This is very basic concepts which we are talking about the things. Now, got my point? We are doing this. What it says, an entity owns a machine. Is that an entity owns a machine? How much? Entity owns a machine that is damaged as a result of forklift truck reversing it. Is that there was a machine which has been got damaged. Is it right? The machine has a carrying amount of how much? 42,000. Is it right? The machine has a carrying amount of how much? 42,000 as such. Is that the machine has a carrying amount of how much? 42,000 as such. At the date of accident, the damaged machine was sold for how much? 15,000. But if the company continues to use the asset, it generates a cash flow of how much? 19,000. Is right? It generates a cash flow of how much? 19,000. Now, what happens when you do the things? Is that what if they will sell it? How much they will get? If they are, I am putting it is as a solution. Is it right? I am writing it as a solution. Now, if they sell it, is it right? The possible sale value. How much possible sale value is? 15,000. Is it right? Possible sale value is how much? 15,000. Okay. This is what it says. This is what it says. Fine. Now, similarly, you have to say possible value in use. Is it? Possible value in use. It will take time for you. Is it right? It will take, is it? Possible value in use. How much is there? 19,000. Is it right? I am identifying with the colors. Okay. Possible value in is how much? 19,000. Carrying amount is how much? Carrying amount is how much? They have made carrying amount. Carrying amount is how much? Carrying amount is 42,000. Is it right? Now, what they are asking us, how it is going to be reflected in the financial statements. Fine. If you are talking in terms of financial statements, how much we are going to show it in the balance sheet, and how much we have to show in the profit and loss account. We have three amounts. Okay. The first one is the carrying amount. The second one is possible sale amount. Is it right? The second one is the possible sale amount, and the third one is the present value in use. How much we are saying? How much it will generate cash? Is that where is the calculator? Are you clear about this? These three things only are there. One is possible sale value, one is possible value in use, and one is what? The carrying amount. Fine. Now, impairment. Is that impairment? Impairment is how much? What is the carrying amount? Carrying amount, is it right? Carrying amount minus, is that? We are not doing anything, is it right? We are not possible sale value, but we are not doing anything, is it right? Carrying amount minus possible value in use. Is it right? 1 minute. Is it? Carrying amount. Carrying amount is how much? Carrying amount is 42,000. Fine. Less. Value in use. Value in use is how much? 19,000. Is it? How much is the difference? 23,000. Is it? This is nothing but, this is the impairment loss. Is it? This we are going to show it in the income statement. Whereas in the balance sheet, is it right? In the balance sheet, what is the value we will show? Tell me fast. Which value we will show? Fast.
Carrying amount 42,000.
Carrying amount is over. Carrying amount is done. Carrying amount was 42,000, but it has been damaged. Is that because of the damage, the value of the asset comes down to how much? If you take 42, previously how much? The asset value is how much? 42,000. Isn't it? This is the amount. See, this is the amount which will generate cash flows. Is it right? Now, when we are doing the things, listen carefully. The value is how much now? It is 19,000. If we are showing in the statement of financial position, how much they will generate? They generate cash flow subject to how much? Subject to 19,000 only. Definitely, is it right? asset has been damaged. When the asset has been damaged, the value of the asset has been decreased. When the value of the asset has been decreased, definitely can the asset generate the same revenue?
Can you repeat again?
Yeah. The value of the asset is 42,000. Okay. The value of the asset is how much? Carrying amount is how much? Carrying, very important. Is that very slow? The carrying amount is how much? 42,000. Fine. Now what happens after damage? Is it right? After damage, the asset value come to how much? Present value is how much? Present value is 19,000. Fine. Now, if asset has not been damaged, you are generating more cash. Is it right? If the asset has been damaged, the cash generated will be less. When the what is the definition of the asset? How much it should generate cash? Is that if generate cash, it is a now the value of the value of the asset which will generate cash will not be 42,000. Is it right? The value of the asset will generate cash is only how much? It is only 19,000. When it is only 19,000, that 19,000 we have to show it in the statement of financial position. Is it clear? Yes, Shifa, is it clear? Fine.
Yes, it's
Good.
clear.
Is that understand? Get my point? See, you have the very simple, very simple. I will give very practical example. Some X, take example of some X. X is having a car. Is it right? Its value is 42,000. Now, X has met with an accident. Car has been damaged, little bit damaged. Is it right? Now what will happen? The value of the car will not be 42,000. Is it right? The value of the car is 19,000. Understand right? Now Mr. X will not show it the value of the car as 42,000. Mr. X will show the value of the car as 19,000. As simple as that. The difference between 42,000 and 19,000 is nothing but the loss. Is it clear for you?
Yes, it's clear.
Yes. Is that? Now, the moment I will give a real example now, the clarity will be more. Okay? Now, and in what we are doing? Recoverable amount. Fine? Recoverable amount. An entity owns the car. See, Alhamdulillah, they are talking about the same thing. Is it right? Now, the entity owns a car that was involved in an accident at the year end. It is barely usable. We cannot use. So the value is estimated how much? 1,000. However, the car is a classic and there is a demand for the parts. Is it right? I don't know how many of you have went to Wadi Kabir. Is it right? There is a big yard. You go there, any car, old, you want any spare, they will get. Find any spare you will get. They will have the means what happens? What they will do? They will take the accident cars. They dismantle it. Whatever is not usable, they throw it out. Whatever is good, they will retain it. Maybe some people will come and some people will buy it. Okay? In future. That is the same example. They have one of the entity owns a car. They went with the accident. What is the value in use? This is very important. Now, slowly and steadily, Sabar, you will understand the terminology not in the first example. Okay? In the third or fourth example, you will understand. Value in use is how much? Value in use is 1,000. The car is a classic. The results of fair value, is it right? The fair value. Fair value is how much? Fair value is 3000. The opening carrying amount, carrying value, is it right? Carrying amount. Now slowly you will get the more you will practice, you will get the thing. Carrying amount is how much? Carrying amount is 8000. Is it? Life of the, what is the life? Life is going to be 8 years. Is it? The from the start, identify what they are asking us. They are asking us what is the recoverable amount. Is that? What is the recoverable amount? They are going to sell it. Is it fair value? The fair value to sell. Is it right? They are saying that fair value to sell is how much? Fair value to sell is 3000. If you sell it, you will get 3000. If you are holding it out, you will have only 1000. Fine? Is that? Now, what is the things? Is that first take carrying value? Is it right? Carrying amount. Is it right? Carrying amount is how much? Carrying amount is 8000. Is it? Next. For how many years? The carrying amount and the car was estimated to have from the start of the year. Is it right? Means you have to take depreciation. Is it right? You have to take depreciation for the current year. Less depreciation. Is it right? Less depreciation. How much is the depreciation? 8000 divided by 8. It comes to how much? 1000. The value is how much? 7000. Fine. Now, how much you are recovering? Recoverable amount is how much? Fair value to sell. Is it right? Fair value to sell. How much? Fair value to sell. How much is the fair value to sell? It is 3000. Is it right? How much? This fair value to sell is nothing but the recoverable amount. What is the loss? What is the impairment loss? Impairment loss is how much? Impairment loss is 4000. This is the recoverable amount. Are you clear about this?
Yes, it's clear.
Is it right? Slowly. Don't worry, inshallah. Don't worry about that. Is that slowly? First, you have to understand. You should get that words should be matched. Now you have little bit clarity. What is the carrying amount? What is the value in use? What is the fair value? And what is the impairment loss? Fine. It says that is a reversal of impairment. Little bit new concept. Is that changes in the recoverable amount? Is that sometimes the events anticipate to cause impairment. 1 minute. Okay, fine. Okay, just I will make it a point, and tomorrow we'll start from here. Okay, sometime 1 minute. We'll stop here. What we have done today. We have done regarding that research and development. We have done when it has to be identified as a intangible asset, when it is eligible and when it is not eligible. If any cost incurred, this is the summary of this today's session. Okay, it is recording. Okay, if the expense has been done before during the research process, it has to be expensed and shown in the income statement. If it is done after the approval, it has to be capitalized. Is it right? That is the basic concept of the incomplete session what we have done. Coming to the impairment of the asset, impairment of asset is nothing the carrying value. What is the carrying value and what is the value which you are going to realize? Is it right? And what are the three different concepts we have done? 4 different concepts. The first one is the carrying value. The second one is the value in use, and the third one is value when we will sell it. Is it right? The difference between the value, carrying value, and the value if we sell is nothing but the impairment loss. Okay? This is the summary of what we have done today. Inshallah, tomorrow the moment we'll come back, we'll start with the recoverable amount, we'll complete this lecture, and we'll do exercise calculations on this lecture.